subject. रुक जाना बाहर, ये दे दो होगा, आ जाना थोड़ी देर में यहाँ पे. Now, as Sunil ji ने कहा कि the provisions pertaining to section this capital gains are contained in section 45 to 55A. All the sections, I mean, these contain the provisions with respect to capital gains. Besides this, obviously, some of we need to refer to definitions for some of the definitions which are there. Rates of taxes are separately provided under section 112, 12A, and all those sections which I'll be referring to later on. Now, if you look at it, the entire provision or entire subject can be divided into 4 categories or 4 sections. One is we have the charging section, and then we have the computation provisions. There are some special provisions in this capital gains, and then we have the exemption provisions also. Now, I'll straight away go to the charging provision first, and the first charging section which is there is subsection 1 of section 45, which is the basic charging section. And this section basically provides that any profits or gains arising from transfer of a capital asset shall be chargeable to tax as capital gains and shall be deemed to be the income of the previous year in which the transfer took place. So now, where was the need for this particular section? Because if you look at historically, there were times when capital gains were not being charged to tax as not being income, being a capital receipt. Now, by a deeming fiction, the capital gains has been brought into the ambit of income tax, and 45(1) is the charging section which in the form of a deeming fiction introduces this chargeability. Now, when we look at this section 45(1), there are 3 important ingredients which are there. First of all, there has to be a capital asset, number 1. Second thing, that there should be a transfer of that particular capital asset. And third thing is that it should be taxable, it will be taxable in the previous year in which the transfer takes place. So the taxability is in the year of transfer, right? So these are the 3 necessary ingredients which are there to initiate the charge of capital gains, charge of tax with respect to transfer of a capital asset. Now, before we move forward to other charges which are there, we need to look at what is a capital asset. Now, as far as capital asset is concerned, now capital asset has been defined in clause 14 of section 2, which primarily defines it as a very wide definition. So it is a property of any kind held by an SSE. Now, property of any kind held by an SSE, Gersa was saying that whether it is owned by the SSE or held by an SSE. Now, at times what happens is that the legislature probably does not intend a lot of things, but then when we are interpreting those provisions and during interpretations we come across such kind of differences, whether held or owned would make any difference. Now, the thing here is that owning an asset may be different from holding an asset. So if I am holding an asset and I transfer that particular asset, even then it would become liable to tax. When we look at the definition of transfer, we'll find certain assets which may not be owned by me, but then even then if I'm transferring them, the tax liability would arise. So in such a situation, I mean, by and large, all properties owned by me are held by me. So property of any kind held by an SSE, whether or not connected with his business or profession, means that we are talking of not just my business and profession assets, not just my investments, but we are talking of all kinds of assets which are held by me and which includes my personal assets also for the time being when we look at this definition of capital assets. Now, 2 more categories have been included. They have been included with specific intent. Now, securities held by FII, the objective was to give them the benefit of capital gains, because this controversy was started when a circular was issued regarding taxability of when 1038 was introduced and the exemption was there from long-term capital gains, and as a result of it, the controversy started as to whether the asset is a capital asset or is it a stock in trade. Now, to solve that particular issue, the securities held by FIIs were classified as a capital asset. Now, this unit-linked insurance policy has been brought in as a capital asset in this particular Finance Act 2021 itself, wherein certain specific categories of insurance policies have been brought in as a capital asset. And when we surrender these policies, or when at the time of redemption of these policies, certain amount out of these would become taxable. So this also we'll be discussing a little later. Now, so that means if you look at capital asset, it encompasses all types of assets held by me, whether for business or otherwise. And then there are some exceptions which are provided. That means certain exclusions have been provided. And for this purpose, 6 exclusions have been provided from the definition or from the term capital asset from all my assets. And here what it says is that stock in trade, consumable stores, or raw material held for the purpose of business or profession. Now, what I'm holding as a stock in trade, consumable, or a raw material, sale from that is a business, and that would be liable to tax as my business income. So this is excluded from capital asset because this would gain from transfer of such kind of assets would now become would become gain from business and profession. So that would not be a capital gain. Now, the second exemption or exclusion which has been provided from the definition is personal effects. That is to say, movable properties including wearing apparels, furniture held for personal use by the assessee or any members of his family or dependents. But that excludes jewelry, paintings, work of art, sculptures, and other such kind of assets have been excluded thereon. Importantly, jewelry has been excluded from the personal effects. So as a result, my personal effects would not be a very valuable kind of an asset. I can have clothes, I can have wearing apparels and furniture, but then jewelry would be excluded from my personal effects. The most important exception which has been provided here is agricultural land in India, subject to certain conditions. Now, this agricultural land has been excluded from the definition of a capital asset, but please mind, we are not talking of all agricultural land. Now, which agriculture land we are talking of, we'll be discussing. And then there are some minor items like gold bonds, bearer bonds, gold deposits, etc. Some of them have become redundant over the years. So now agriculture land is the most important exception which has been provided here. So everything is my capital asset except stock in trade, consumable stores and raw materials. And then we have personal effects which are excluded. Jewelry is a capital asset. Agriculture land has been excluded. But not all agricultural land has been excluded. I am not going by the language which has been used in the section. I just tried to decipher that particular section and come to the conclusion as to what it is. When we look at the kind of exception which has been provided, any agricultural land which is within a municipality having population of less than 10,000 is not a capital asset for the purpose of section 214. So that means it is outside the definition of capital asset. On the other hand, any land within municipality of having population of 10,000 as per the preceding last census, the results of which have been published. So we all know in our country we have census every 10 years, and once the census takes place, thereafter the results are published and notified. So now, till the time they are not published, till the time the census results have not been notified, till that point of time, the earlier census would prevail. So now, any municipality having 10,000 population or more than 10,000, and if the agricultural land is located in that particular municipality, then it will be treated as a capital asset which will be liable to tax. Now, further, we have now, this was when the land is located inside the municipality. Now, if the land is outside the municipality, then in that particular case, again, we need to refer as to which is the nearest municipality. Now, if the municipality, the word which we are using here, municipality is not just municipality, any town area committee, any cantonment board, or any other such body which looks after the local maintenance and development of the local area, that they all have been put together as one category. So for the sake of convenience, I'm using the word municipality here. Now, if the population is less than 10,000 of that particular town or municipality, as the case may be, then anything outside that municipality even if immediately out of that, would still retain the character of an agricultural land which is not a capital asset under section 214, because when the population is less than 10,000, then the land inside the municipality also still retains the character of being a non-agricultural land which is not a capital asset. On the contrary, as the population increases, the radial distance from the municipality also increases, in which if the agriculture lies, it would determine whether this would be a capital asset or not. Now, if the municipality has a population of more than 10,000 but less than 1 lakh, in that particular case, a 2-kilometer radius outside that particular municipality, measured by an aerial distance, would determine if the land is within that particular radius of 2 kilometers, then this would become a part of the capital asset. On the contrary, if it is outside 2 kilometers, then it would not. It would be an agricultural land which would not be a capital asset. Similarly, if it is the population of the municipality is between 1 lakh and 10 lakhs, then it is 6 kilometers, and if it is beyond 10 lakhs, then it is 8 kilometers. That means outside the municipality up to 8 kilometers also, this agricultural land would still remain a capital asset, and outside that it would become it would not be a capital asset. So that means, what is the implication here? The implication here is that the agricultural land which is outside the definition of capital asset under section 214, there is some agricultural land which will be outside the definition of this section 214, and there will be other agricultural land which would be treated as a capital asset. Now, a gain arising from transfer of a land which is outside the definition of capital asset under section 214 will not be liable to income tax, because the charging section itself provides that the tax is profit and gains arising from transfer of a capital asset. Once I say it is not a capital asset, then please note, sale proceeds arising or the profit or gains arising from transfer of this particular agricultural land will be a capital receipt, not liable to be taxed under any other head of income, which I'll be coming back to stock and trade also, I'll be discussing separately. So now, to take the advantage of an agricultural land not liable to be taxed under the head capital gain, there are two conditions which should be satisfied. First and the foremost is the location criteria which is provided in the definition itself. The second is that the land should be an agriculture land. Now, if any one of these two criteria is not met, then if I do not fulfill the location criteria, that means I am within that municipality or within the radius of that particular municipality, then I become taxable. Secondly, if I'm not, the land which I'm owning is not an agriculture land, then also it would become a capital asset, and I would not get the exemption by being outside the definition of agriculture land, being outside the definition of the capital asset. Now, what is an agriculture land? Because the basic thing is that we have provided exclusion from capital asset only of agriculture land. And then the second criteria which it must meet is it should be within the municipality or within a certain radius of the municipality. But then the basic character of land which wants to be excluded from the definition of capital asset has to be an agriculture land. Now, honestly, when I was doing a little research on this particular agriculture land, that was, I think, some 15 years ago, and when I tried to search out the judicial precedents on this, I could make a compilation of at least 500 to 1,000 pages, wherein I could find so much material on this to decide as to what is agricultural land. But in spite of so much material available on this agricultural land, it is still a matter of each and every case has to be based on the facts and circumstances of each case has to be seen. Now, there are determining factors. And for this particular determining factor, the Gujarat High Court judgment in the case of Siddharth J. Desai, 139 ITR 628. Now, in this particular case, the Honorable Gujarat High Court analyzed all the previous judgments of Supreme Court as well as other high courts, and listed down all the determining factors as to how the agriculture land, how it would be determined whether it is an agriculture land or not. So now, some of the, if we get into the details of that, probably even 2 hours we'll be discussing this, and we still may not reach any conclusion, because the Supreme Court, in its own judgment, in spite of analyzing at length and giving a very detailed order, itself said that there is not a single or one criteria which can be fixed which could decide whether the land is agriculture or not. It is based on the facts and circumstances of each case, it would be decided whether it is an agriculture land or not. And some of the indications which can be there is, of course, one is usage. That means if the land is being put to agriculture use and it is being used for farming, cultivation of land, and the land produced is being sold, then of course this would qualify to be an agriculture land. Revenue record is again a very important criteria. Now, revenue records classify the land. This is all over the country. We have those revenue records for each state, wherein the land has been classified into various categories. Now, revenue records is an important criteria. Then, surroundings of that particular land is also a criteria. You can have a situation where the person has a piece of land. Surrounding that particular land, we have all townships which have come up. It has got developed. Now, for example, I can give you a case of even Greater Kailash. Now, GK1, where just near my house, there's a huge piece of land which is being used as a nursery, and it is this must have been one area. This is right opposite that Archana complex. So the point is, now this particular area, it is still being used as a nursery, but if you look at the surrounding, it is entirely surrounded by residential areas. And then another criteria which has been pointed out by the court in a number of judgments is economically whether it is viable for agriculture. That means the land, whether it is being sold as square yards or by acreage. And if the land, if for say example, if you are purchasing a land today in Gurgaon, and the land cost is say 15 crore rupees per acre or 50 crore rupees per acre. Now, obviously, even if for some time the previous owner was carrying on agriculture operation thereon, or you after purchasing also you may carry out agriculture operation there for maybe a couple of period or some period you may carry on agriculture there, but that would still not partake the character of agriculture land, because at 50 crore rupees per acre or 10 crore rupees per acre, agriculture activity cannot be economically feasible. So as a result of this land cannot be termed as agriculture land in such a situation. Moreover, if it is being sold in the form of square yards, then of course it loses its character unless it is being used as in acres or hectares, as the case may be. Now, as far as agriculture land is concerned, there has always been, earlier there were notifications for this, now it has been brought into the section itself, that the distance has to be measured. Now, the question which came was that, one of the questions which arose was whether the distance has to be taken by any approach road, or do we need to take a crow fly or a aerial distance, or a straight line distance has to be taken. Now, this matter came up before Supreme Court, and before that it came up before Punjab and Haryana High Court also in Sanjay Pal's case. Now, in both these cases, the honorable courts held that the distance has to be taken by the approach road, and you cannot take a crow fly distance or an aerial distance or a straight line distance cannot be measured, because that would reflect the development of that particular area, and not a straight line may not reflect the development of that area. If the roads have not been developed, that means the area is not developed, and still it retains the character of an agricultural land. But this provision was amended with effect from 1/4/2014, wherein the distance has now specifically been mentioned as aerial distance. That means now you can't take the shortest route to that particular land. You'll have to measure it aerially to decide the distance between the border of the municipality and the radius within which the land lies. Another very interesting question came up was that a land, it belonged to Taran district. Now, Taran district, the radius distance which was notified at that point of time was 2 kilometers, whereas Amritsar had a radial distance of 8 kilometers. Now, what happened was that the land was belonging to the district of Taran, It was outside 2 kilometers of Taran, but the same was within the 8-kilometer radius of Amritsar. So now the nearest municipality, the question came, nearest municipality is Amritsar. So whether this can be taken as this capital asset because it falls within the radial distance of Amritsar. So there it was held that the development in that particular area would be carried out by the district to which that particular land belongs. If the land belongs to a certain district, then the nearest municipality of that district has to be seen. We cannot see any other municipality. But these are some of the questions which have been there for years. Now what we have is that rural agriculture land, which is within a municipality of less than 10,000 population, or which is beyond the radius difference of 2, 6, and 8 kilometers, depending on the population therein. Now we'll term it as a rural agriculture land. Now this rural agriculture land is not a capital asset under section 214, and as we have already seen, once it is not a capital asset, then it would not be hit by the provisions of section 45(1) at all. So 45(1), the charging section will not hit the transfer of such a land at all because it is not a capital asset. On the other hand, there are two more provisions in the statute with respect to agriculture land, because I was dealing with agriculture land, so I thought let me finish off with these two provisions. First of all, compulsory acquisition which is not liable to tax under section 1037. Section 1037 provided, we'll just discuss 1037 also at length. And then there is another provision that if you have sold agriculture land and you purchase another agriculture land within a period of 2 years, then there is an exemption which is provided under section 54B of that. So the point which I'm trying to say here is, now once we say agriculture land is not a capital asset, it is outside 45(1), then why do I need this 1037 and 54B? Now the point here is that not all agriculture land is outside the capital asset. If it is outside the capital asset, then I don't need any exemption. I don't need any exemption under section 10 or 54B. I don't need it all. So this 1037 and 54B will come into play only if my agriculture land is a capital asset and is liable to tax otherwise. So if I'm liable to tax on this agriculture land, then I can avail exemption which is provided under section 1037 and section 54B. As Sunil ji had pointed out, now I'll just briefly touch upon this particular 1037 because after a certain stage, although there will still be a lot of cases which would still be pending with respect to earlier acquisitions which happened under the old laws, but then let me just briefly touch upon it, and then we'll come to what is the present status as far as section 96 of this right to fair compensation and transparency in land acquisition is concerned. Now this section 1037 provides that income chargeable to tax under the capital gains, if this land was used for agriculture by for the past 2 years by the SSC or his parents, and the land belongs to either individual or an HUF, and this land, if there is a compulsory acquisition under any law, then in that case, there will be an exemption of the gains which would be arising from a compulsory acquisition of this agricultural land. Now, if we look at it, there was no condition that this land should be a long-term capital asset. It only says that if land belongs to individual or an HUF, and if it is used for agriculture for the past 2 years by him or by his parents, then in that situation, this land, the profit and gains arising from this because of this compulsory acquisition would be exempt under section 1037. Now, as Sunil Garg pointed out, subsequently, in 2013, this right to fair compensation and the transparency in land acquisition and rehabilitation and resettlement act, which was there, I think this must be one of the longest, this must set a record for the longest name of any statute ever. I don't think I have come across any name of any statute which is so long. But anyway, this was the act which was passed in 2013 and became applicable from 1st of January 2014, wherein the acquisition of land and the compensation which is to be paid to the owner of the land was drastically changed, and it was the acquisition became very difficult, but became very expensive also, because the compensations which were to be paid were multiple times of the market price of those lands. So as a result of this, and there in that enactment, in this particular act, section 96 provided that any gain arising to the person whose land is being acquired under this act will be exempt from tax, and there will be no income tax liability. Now what has happened is that no corresponding amendment has been made in the Income Tax Act. Now this is very important and relevant. It's good that Sunil Jadji pointed out in his initial this address. I came across a case where an SSC paid taxes, and he paid huge amount of tax on his acquisition, in spite of the fact that he was covered by section 96 of this act, which provides an exemption. But correspondingly, because there was no provision in the Income Tax Act, and the gentleman who happened to be filing his return possibly could not give him a proper guidance. As a result of this, he lost a lot of money. He had paid a lot of taxes, and he wanted a redressal of what had already happened. Now, in a way, 1037 has become redundant now, because compulsory acquisition, if it is now, which will be happening after 1/4/2014, that would be under the new law, which would in any case be exempt. And please note, there the